Okay, we're live. Took me a minute to figure it out. All right, so good morning, everybody. This is Joyce Fritz for your Friday edition of Just Ask Joyce. It's the 17th of April. And as I was sharing with you yesterday on my check-in, I was going to be having my amazing lender, Doris Ramos, join us to answer some questions. I've been doing this for a long time. 16 years. And what I have found in this business is that it's really important as your real estate agent to partner with rock stars that can just really take great care of my clients. And I connected with Doris a few years ago, and I just have to say this woman is amazing. She offers a high level of service, takes great care of my clients, and I just can't say enough about her. So when I thought about adding somebody to my Just Ask Joyce to talk about lending questions and loan questions, she was top of mind for me. So good morning, Doris.
Good morning, Joyce. Thank you for the kind words.
Are you surviving at home with your daughter?
We're surviving. It's fun and it's tough, but she's loving it, and we're getting stuff done, so it's good.
Good. I know it can be a challenge to be, a working mom, and then add to the mix. Now I've got to be a working mom from home, and I've got a little girl who's like, Mom. And so it's like, I know you've been sharing with me, that's been a tough challenge. So my hat's off to you for juggling and making it all work. So today I thought we'd talk about loan forbearance. A lot of people with their job situations are finding themselves, either put on permanent leave or temporary leave. And both of those have put them in a financial bind where they are struggling to not only, pay their regular monthly bills, but maybe even their house payment. So I thought we would talk about some of their loan options for that situation. And one of those options is a forbearance. So go ahead and share with us just what is a forbearance.
Yeah, absolutely. Forbearance is a way that somebody that finds themselves in financial hardship, which a lot of people are in that situation. We're watching the news, and there's, millions of people that have applied for unemployment that are being affected by the shutdowns, et cetera. And so what the forbearance will do for you is it will allow you to take a break from making your mortgage payments for a certain period of time.
Gotcha. Okay. All right. And so how would somebody get that started if they want to, apply to take that break? How would they start that process?
Every lender, or I should say servicer, is a little bit different, but most of the time you can apply online. You might have to make a phone call in, fill out a form, et cetera, wait for an email. But really, you should be reaching out to your servicer. For some lenders out there, they're the lenders, and then they sell the loan to a servicer. So that could be somebody else. So whoever you make your mortgage payment to, that's who you want to reach out to, and let them know that you are looking to apply for a forbearance.
Okay. And you and I were chatting a little bit before we went live. And one of the questions you were sharing with me that you get often asked is, how is it going to affect my credit if I apply for and receive a forbearance?
It will not affect your credit negatively. It is not going to be reported to the credit bureaus as you being delinquent, et cetera. It is important to note, however, that you are considered to be late, but it's just not going to be reported that way to the credit bureaus. So it's a really good way, again, if you feel that your situation is going to be temporary, to be able to not affect your credit, keep that good credit standing while you get yourself back on your feet to make your payments.
Gotcha. Okay. And so let's say I apply for the forbearance, I get the forbearance, but the amount of time I'm given to, follow the guidelines that I'm given for that forbearance, I need some more time. I run out of time. Maybe I just didn't have quite enough money. What if I need more time?
So in a normal scenario, if you find yourself in a hardship, they normally give about 3 months of forbearance. With the passing of the CARES Act, that's automatically been extended to 6 months. And the lenders, most of them, and again, I'm speaking for Umpqua Bank, the knowledge that we, or the guidelines that we're applying. So it could be a little bit different for your servicer, but we can extend that out to 12 months if needed. And if you need more time than that, then you can definitely, again, talk to your servicer, talk to your lender about what the other options are. They might be able to do a modification, or they might be able to put you like on a like partial payment plans to get you back on track. But really the goal is to avoid foreclosure. It's never a fun thing for you as a homeowner or for the bank either.
Right. Excellent. Well, that's all great information. And so any of you that are watching, if you listen to this post, this video, and you find yourself coming up with some additional questions, please post them underneath so that Doris and I can plan another live video to answer your questions. Because I know a lot of people are really concerned right now, right? I'm sure you're getting a lot of phone calls. People are concerned about, they don't want to mess up their credit. They don't want to find themselves in, default, or starting to get those, notices in the mail that you haven't made your payment. So,
and if I can add just one last thing, I think it's really important that we separate like the facts and what we can hear, etc. I cannot drive this home anymore, but if you can still make your payment, if you're still working and you're still in a financial position to make your payment.
Yeah.
Because the forbearance, even though it will solve your temporary problem right now, it can create issues down the line. So for example, you won't be able to refinance your home if you're in a forbearance.
Gotcha.
Things like that. So if you can make your payment, please make your payment. This is not
Don't
like a free get out of jail free card.
Where it's like, oh, I'm just not going to make my payment and say it was the coronavirus. If you can make your payment. Exactly.
Because the other part of a forbearance that's different from maybe some other things that we had seen in the past, like with the last recession that we had, was that once you come to the end of your forbearance plan, whether it's the 6 months or the 12 months, whatever your lender provided to you, now you have to make all those payments at once. So let's say you took 6 months and now it's month 7. Yeah. So now all 6 months plus month 7 are due. There's no late fees associated at all. But now, month 7, you've got to make 7 months worth of mortgage payments. So that's, very important for everyone to remember.
That you don't want to put yourself in that situation if at all possible to avoid it. So thank you so much for that, that wonderful information. And I hope that it's helpful to everybody out there. And we're going to start doing check-ins on Fridays. I think that it's going to be valuable to continue to provide information on what's happening on the loan side of things, right? Because we know there was a lot of misinformation floating around out there when I think it was the credit card interest rates got cut to 0. And I know you got flooded with calls and you're like, so I think it's important to just, continue to try to put the correct information out there to the best of our ability. So thank you for joining me this morning. And I hope you have a wonderful rest of your day, everybody. And just go out there and make it a wonderful day. Find somebody you can bless and find somebody you can serve. Thanks again for joining me, Doris.
Thank you. Thanks for having me. Have a great Friday.
Bye-bye.
Bye.